Today, let's hear from someone who has done deep dive research on Tesla as to why he thinks, despite the stock currently at $412 as of Friday and had hit all-time highs of $479 on December 17th, is still a potentially good value when thinking out longer term, like 5 or 10 years from now. Elon Musk yet again yesterday said Tesla has the potential to be number one by a large margin on a list of the most highly valued companies today. But what date might this happen? And why is 2025 the year when everything changes? And despite that, why as an investor you should still keep your expectations in check? Cern is a chartered financial analyst who's currently running his own investment advisory firm called Brilliant Advice, providing wealth management services. Welcome, Cern. Thank you again for joining me.
Hi, it's good to be back. This is a great topic to talk about.
So first of all, you're the perfect person to talk about this because you've done deep dive. You've done research on so many of this, like real research on every business. But you've also done quite a bit of research on like how stock moves, how this particular Tesla stock compares to, the big Mag 7s. Like you've done a comparison to Microsoft and Apple and Amazon. And so that's what I wanted to ask you today. And there's two audiences, right? The first one would be like people who haven't yet invested in Tesla, kind of wanting to know in general, how do you think of it? And then two, you have done a number of, you've discovered a few things about Tesla stock and it's how it reacts and how it compares to the others. And just want to collect all of that you've discovered and all these various shows we've done, bring it all back together into one part. So you and I, just to be clear, right? We're both investors in Tesla. We both are kind of long-term people who think long-term. We're not trying to time it. We're not trying to see if the stock will go up by this year. It'd be nice, but we're not needing that money by then. Right. Step one. Step two, this is not investment advice. You are an investment advisor or sort of a financial advisor, but this, as you know, and you've said this many times, each person watching is in a very different financial situation than others. And so in order to really give true financial advice, you need to talk to them for a long time and understand their, so if you're watching this, don't just necessarily take this as that. So let's start with, we've had Elon mention several times that he believes this company is going to be the most, most valued company in the world. So here's this just recent tweet yesterday, right? This guy, John Ehrlichman, said, here's the current valuations of the top companies in the world right now. NVIDIA is $3.6 trillion. Apple, $3.4 trillion. Microsoft, $3.3. And you can see here, Amazon, Alphabet, Meta. Tesla's at $1.3 trillion, and this is at the $412 stock. And then Elon replied to him, and he said, Tesla has the potential to be number one by a large margin. I mean, over the last several months, years, he has repeated this claim that he believes Tesla will be the largest company in the world. I think, a year ago, he said it's going to be larger than Apple and Saudi Aramco combined. So he's got this belief. He's been saying this. When do you think this might happen if you do believe that this is going to happen?
Yeah, let's just put up the first chart again, if you would. And let me just highlight a couple of things there. So the one thing that I think is interesting when you look at this list, they're all tech companies.
Yeah.
And I don't know that this has ever been the case up until recently. I'm not sure when top 10 in the world, have been tech.
Right. So wait. So there's like oil, there's pharma, there is energy, right? I guess, oil.
Consumer goods, consumer durable, consumer, staples, consumer discretionary, healthcare. Now, I'm not sure if this is actually the complete list of the top 10. There may be some non-tech names in that top 10. This just may be a sample of them. But it is pretty amazing that you've got these 10 companies over $1 trillion. They're all tech. Many of them sort of started to do very well with the internet, right? But it's tech, it's communications, it's the chips that go into those devices, into those products with Broadcom, Taiwan Semi, and NVIDIA, right? And then you've got the companies that built their businesses on the back of the internet, on the back of these telecommunication devices. And then the one sort of interesting one in there that looks very different is Tesla, which is quote unquote car company.
Yeah. Good point.
And so that's interesting just by itself, is why is a car company in this list? Well, the reason is that Tesla is not just a car company. If you think of Tesla as a car company, then you won't understand why Tesla is valued the way that it is,
Hmm.
right? You'll have sort of a mental block that won't allow you to really understand Tesla's valuation. Because when you look at the cars that they deliver on a quarterly basis, it's a fraction of the size of the leading car manufacturers in the world. And even if you looked at how many cars Tesla may produce in the future and the growth rate of that, you would still be hard pressed to justify Tesla's valuation today. It's possible you could get there, but it might be difficult. So there must be something else going on with Tesla besides just making and selling cars. And the reality is it's true. Tesla is one of the premier AI companies. Now, the problem with AI today is that the companies that are making money in AI are the ones that are providing the infrastructure, the chips, and the products to build AI data centers. That's where the profit is largely being made today. And then you've got a series of companies, whether it's Microsoft and OpenAI, whether it's Google, whether it's Amazon, even Apple, and particularly Tesla, that are making massive investments in AI to produce a whole new set of products that the world has never seen before. AI that will act as an agent in your devices, your
Hmm.
computers, your phones, your tablets. And in the case of Tesla, AI that will interact with the real world and power automobiles and power humanoid robots. They are, and other companies are in this space developing products that we've never seen before. And yet, when you run some financial projections on what the potential is,
Hmm.
it is absolutely mind blowing. And so today in the market, we have this tension between what Tesla is right now, a car company. They sell cars, they also sell energy storage devices, batteries, large batteries, versus what Tesla will be in the future, this AI powered robot company. And so the valuation reflects some of the new business, but in my estimation, just a little bit, because the true potential of that business
Yeah.
is enormous. Right.
Right.
And so that's where we are
Fantastic.
today. So
Yeah.
when you ask when will Tesla be at the top of that list,
Mm-hmm.
the answer depends largely on when more people will start to realize the true potential of this. At one end, you have people that say, well, Tesla won't get to that level until they actually start selling products, until robotaxi is in operation, until the humanoid robots are deployed. Tesla can't get to the top of that list. Maybe. And that would be a conservative view of how quickly Tesla can move up the list. But if you truly understand what the opportunity is, then let's say the opportunity for Tesla is, in the 10, 20, 30 trillion dollar range in terms of its market value. Is it so crazy that Tesla is valued at a 2, 3, 4, even $5 trillion today? Perhaps not. Clearly, the market, though, is being more conservative with Tesla's future valuation, and many people would say that Tesla's current valuation puts it in a massively overvalued category.
Right.
So that's the great debate within the market, and the beautiful thing about the financial markets is it sorts that debate out on a daily basis.
Sure. So you, Scott, Cern, first of all, thank you for explaining all that, because the key thing here is like, eventually, right? I believe, again, it's just my own belief, and again, that's my thesis, right? Is that AI is much bigger. It's more than just a tool.
Yeah.
It's going to be bigger than the internet, bigger than cell phones, bigger than any other previous invention ever. Like, not only bigger in terms of impacting human lives, but the market. Who's going to win? Who's everything you can think of is going to completely disrupt it. Like lawyers, law firms, legal firms will be completely disrupted by AI. So it's possible that an AI company become. I was having this conversation with my wife recently, and she said, we should invest in healthcare, which we have in the past. because there's no doubt about it. Everybody's still going to get sick and everybody's still
Mhm.
going to need new medications. And I said, I agree with you. That's absolutely true. But at some point, who's going to invent the next so cure, not just treatment, but cure? And it's actually more likely that it's an AI company with a
Right.
massive data center, with a massive neural net skills, and they take that, and you already have DeepMind that has proven that they already released this for free. That they didn't have to do this, but they did it for free, where they discovered all of the permutations of how a protein can fold, and it
Mhm.
typically took one PhD student 4 years for each protein at the time. And now they just released it and they were able to get all of that. Who did that? It was a tech AI company who did that, not Johnson and Johnson, not Baxter, whatever these other pharmaceutical firms or medical companies.
Well, the
So
other thing too with that, Herbert, is if you can catch something like cancer early, the treatment probably is a lot less expensive.
you won't need to buy the hypertensive medication that you use every single
Yep.
day. If somehow they are able to just cure hypertension, you won't need that anymore. So then
Right.
those drugs. So it's a race, and they can be disrupted.
Yep.
I'm not saying that it's a bad investment. I don't know. It's just that my thinking is that the next thing my thesis is that in the next, I don't know, let's call it 5 years, this list will be it already is. You just said it. There already are AI companies.
Yeah.
That's going to be this. And
The other
then,
way to think about
yeah,
it too is that we are developing intelligence.
right.
And so intelligence is useful across every single sector. It's not just healthcare, but it's the
Every
consumer
sector.
sectors, it's the financial services sectors, it's materials, it's utilities. Every single sector of the economy can benefit from higher intelligence
Yeah.
built into their products and services, right? So every single thing that we buy in the future will talk back to us.
Mm.
You kick that garbage can, it may talk back to you. We've never had that before in
Yeah.
humanity, right? And so,
Just last night, I watched my wife and I watched a TED talk that I'd seen a week ago, and I said, "You got to watch this." It's Mustafa Suleiman, and he did a 20-minute TED talk talking about AI. This guy is now in charge of Microsoft AI, right? He
mhm,
was a co-founder of DeepMind,
mhm,
and so okay, I mean, this is he has a lot of involvement in OpenAI. This guy, okay, fine. I mean, who has any credibility in AI? I don't know, but this guy might have it. Anyways, he spent this great TED talk, and he's like said that, and just don't take it too far. But he thinks that what is it that we're actually building? What is AI? And he ended up saying, I think it's a digital species.
mhm.
And let me explain. And he goes, it's not a perfect metaphor. It's not biological. This thing doesn't, necessarily reproduce yet. But he gave a reason, and he said what you just said, which is in a not too distant future, countries, cities, uh, every object, right? Everything will have its own AI, and it will be more than just a tool. It's not just a tool anymore. You're going to be communicating with it. It's going to have its own personality. Everything.
That's right.
So
It's it's interesting because we use the term AI, and I think we tend to forget what AI stands for, right? This is artificial, and that's kind of a weird word, but it's intelligence. And
mm,
so if you think about a world where we don't have any intelligence in machines, we are limited to human intelligence, which is amazing. But human intelligence is expensive to obtain, right? You have kids, it takes years to educate them, to bring them up to speed before they can contribute in a meaningful way to society at large. So human intelligence is limited. But with machine intelligence, when you get to a certain point, it is absolutely unlimited.
yeah.
And I think even those of us that follow this very closely don't fully appreciate the implications of unlimited intelligence. Another way to think about it is we're driving the cost of intelligence towards zero. Whenever you drive the cost of something down towards zero, you get a lot more of it. In fact, it becomes plentiful. It becomes persuasive in everything. And so I joke about the garbage can talking back to you,
I know
but
it's real.
everything could talk back to us.
Yeah.
You could have a conversation literally with everything.
Garbage can will go out there and it'll know on its own to go out there and come back. And
Yeah.
so so going back to Tesla again, you said you didn't give me a date of when you think it'll be the most expensive site. So where do you personally believe it is? It's going to be the most valuable company on earth, more than 3.6 trillion of Nvidia. Of course, barring whatever
Yeah.
happens to the world, of course. But even if everything happens to the world, all of these valuations will fall too anyway. So it's a kind of like relative.
Yeah, and actually, I see the valuations of those other companies also rising. So you're
Me too.
trying to catch, a moving target in that
hmm
sense.
hmm
I think it's entirely conceivable in the next 2 to 3 years.
Okay.
And I would say that's based on the developments that we're seeing with autonomous vehicles
hmm
by Tesla.
Well, by the way, Cern, if just autonomous vehicles and no bots haven't yet contributed to the bottom line, not yet proven, is that enough to take a
Yes.
1.3 trillion to 3.6 trillion to 4 trillion, let's say?
Yes, absolutely.
Okay.
That is
But
enough.
that would require global
Yeah, it
you know,
depends on how quickly the rollout is. But
adoption.
again,
hmm
once we have a business model and once Wall Street in particular starts to see how repeatable that is and how you
Yeah.
can just duplicate that in every city in the world,
Yeah.
then the extrapolation can really truly begin and you can actually figure out what the true market opportunity
Okay,
is.
well, let me push back a little bit, sir. Just again, I'm trying to be trying to look at this in the right way. Nvidia, Apple, Microsoft, Amazon, Alphabet. I'm just read down the list there. They all friggin' have huge revenues. They have really big cash on hand.
Yeah.
They have real amount of earnings. Growth is coming, but this is like real products being sold. And now you're telling me, well, Tesla, they proved that they got robotaxi.
Mhm.
They've proven it in a couple states. And then there is some amount of forward-looking valuation, but yet the valuation of the stock at 3 trillion is not built on earnings yet. It's now built still on some hope for growth of the future. Is that, am I reading this wrong? I mean, like, you know what I mean?
Well, the stock market is always a forward-looking enterprise. Now, the question
hmm
only is how far forward is the market willing to look, right? Is it willing to look beyond this year? And I think the answer to that is yes.
Yeah.
Is it willing to look beyond next year? The answer to that is partly. And so as we move on in the years, the answer is, less and less, right? That factor in that. So it's more near term and less long term. But the things that you and I have been talking about and other guests on your channel have talked about in the long term are slowly getting pulled, or actually in many cases, quickly getting pulled into the near term, right? We're talking about production of bots. We're talking about rolling out the robotaxi network. We're seeing more and more optimistic comments from executives at Tesla, right, about robotaxi. We're seeing evidence of orders being placed with suppliers, or discussions at least about that on the bot side. So as all that gets pulled more into the present or closer to the present, then that will allow the valuation to start to move up to reflect that potential.
Yeah.
I can't predict when that will happen. It may not happen until, the first revenue hits the books. But as many people have pointed out, well, if you think it's going to happen next quarter, then why not build it into your valuation now,
Yeah, certain
right?
people will. So, but like, I guess my example would be it's like a disruptive tech, right? If somebody came out, some company said, "By the way, we've just discovered nuclear fusion. Like, like this is low cost
Yep.
energy, and just using nuclear fusion, not fission, nuclear fusion, which is the holy grail." And they prove it, and all the scientists say, "Yes, you've done it." Then they've actually built an example of a I don't know what you want to call these things, a plant or something like that, and it's generating revenue. At that point, wouldn't that stock be, all of them jump to like say $5 trillion? And yet they hadn't sold it to everybody, but it's clear that they've got the patent for it, they own it, whatever. There's obviously risks, but
Yep.
right, like that's what I'm talking about versus because it is robotaxi. This is bots, humanoid bots. Uh, then there's the question of, is there going to be competition? Is it winner makes all? And so how big is that? But there's some amount of you've discovered something, you invented something, even if it's not rolled out yet, your stock should increase.
Yes, there is. And we see that with a lot of startup companies.
All right.
The venture capital world is more than used to putting a value on a company that doesn't yet have any revenue. that has a great idea or companies that have developed something that's unique that they have patents on, the VC world does an amazing job of valuing those companies. Now, typically those companies don't go public until they're revenue producing and in many cases profitable, right? Because public markets tend to want to only invest in companies that have, you know, revenue and rapidly growing revenue. That's the best time to go public. When you're no longer there's no longer just a story attached to your stock. It's
Right.
true revenue producing. But that said, that doesn't mean that there's no value to something where there is no revenue yet. There's actually a lot of value to that. But we have different parts of the market that work on those different things. Now, with Tesla, we have a public company that has an existing business, the EV business and the energy storage business, plus a couple of venture capital arms.
Mm.
And right now, the public markets don't do a very good job, in my opinion, of valuing those VC parts of Tesla's business.
Hmm.
And we hear that all the time from analysts. They're like, where's the demand coming from? Or tell me what Tesla's market share is going to be or how big this market is. They can't really comprehend it because it doesn't yet exist. Because they're not VC investors, they're public market investors. And here we have a stock that straddles both of those worlds.
Mm.
And in fact, the bigger opportunity with Tesla is in fact in that VC world, not in the current public market world. So if Tesla was somehow split apart into the public market part, autos and energy, and you could value separately the VC parts, I think Tesla's valuation could be materially higher than where it is today.
Agreed. Yeah.
Again,
If you
that's my
split them
opinion.
into two, right? The
Yep.
AI, basically real world AI. So okay, so the other thing we talked about was here's the top biggest companies on the world right now. They're all tech companies. Talk about the volatility though, right? So we have to be very careful, right? So there's people who want to decide what stock to invest in. And you can choose Apple, and I have for years, right? Because it's like I'm using the product. I can see everybody sees it. It's a fantastic product. Everybody needs a cell phone. They're now moving to subscription, and you can I already see it now. I'm paying them like $100 a month now, like because they sucked me into Apple Music, all these things, and I can see all that. Um, but despite that, all these companies, because they're tech companies, they're very volatile. Now, Tesla, is it more volatile than the others? Volatility means, and you've shown me a graph before, right, where the stock has huge drawdowns. Like it can go from where it is now to 1/3 of what it was. That's what happened to Tesla. But you also showed me that all these other companies, believe it or not, Apple, Microsoft, they have huge drawdowns too. So don't be fooled to think that, you know, that these are like stable companies. Like they're now. Can you speak a little bit to volatility?
Yeah, I think there's two important things to say about volatility. If you have a company that has no or little growth, the stock is not going to be volatile,
Coca-Cola. Yeah.
right? They're going to be much more stable, and particularly companies that are paying dividends and all that. They're going to be very stable. So volatility is a bit of a code word for saying what's the growth potential.
Mm.
The higher the growth potential, generally, the higher the volatility, because there's room for different opinions in the marketplace, right? With Procter and Gamble or Coca-Cola or other companies like that, all the analysts are probably pretty much within 1 or 2% of each other in terms of what those companies' earnings are going to be this year, next year, and the 5 years from now. But with a company like Tesla and Nvidia and other companies, the dispersion of what analysts thinks gets wider and wider as you go out in time. And therefore, because there's such a difference of opinion, it does, I think, create potentially more volatility in a stock depending on who's trading the stock in any given day. The other thing too is high growth companies attract different kinds of investors than low growth ones too. So if you are an option trader, there's no activity, no opportunity to trade Coca-Cola options, right? Good luck with that. But there's a lot of short-term opportunity in trading Tesla or other highly volatile stocks. And so the actions of option traders
Causes
can
more
also
volatility.
influence the underlying stock price.
Yeah.
So all this kind of feeds on itself. But in my view, high volatility is just kind of telling you that this is a high growth opportunity. So it's neither good nor bad necessarily. From an investor standpoint, actually, high volatility can be very helpful. If you're investing money over a period of time, you get the dollar cost average lower. Or if you're employing option strategies, you can use that to your advantage. There's all kinds of different things that you can use volatility for,
Hmm.
right? Or the people that are selling covered calls. The only reason those calls have high value is because of the volatility. If the volatility was very low, the premium you would get on selling a call would be tiny. So the volatility isn't all bad,
Yeah.
and it's a
And
sign
it's,
of high
yeah.
potential growth.
This is why do not buy Tesla stock, right? I mean, be careful about it. If you are somebody who needs the money in a year, 2 years, and you're expecting it to go up or down, we don't know. It's so volatile. Look what happened in the last 3 years.
It's a
Um,
long-term investment, and any high growth company should be treated as such.
because
Again,
yeah,
unless you're, a trader and you have different strategies. And there you're not really so concerned about Tesla's, fundamental position in the markets. You're just kind of more concerned about Tesla's stock price movement. You almost don't even need to know what the company does. You just trade the stock because it's
that's
got
if
enough
you're
volatility
yeah.
to it.
But most of us who are retail, we are hoping that this company that we bet on has got a new invention. That business is going to change dramatically. It's going to win a new market, and now you don't know when that's going to happen, and it could happen, but it could happen years later than you think. So just be careful. So what do you say to somebody who says, "I like Tesla. I looked at it. I'm starting to get interested in it. I like the cars. I can see now what everybody's saying, but it's at its all-time high. It's at
Mhm.
$420 today, and it was at 480 last month. But it's like it was at 200 just 6 months ago, a year ago. This is now at the all-time highs. Is it still a good investment today?"
Yeah, it's interesting how investors like to anchor themselves on
Mm,
stock price history. Right, and it certainly feels more comfortable to invest in a stock that's down maybe 60% from its high than it does to invest one that's at its high or recently come down from its high, because we anchor on that high price. The question is, what is Tesla's value? And if you don't do the fundamental work, if you don't build a model for the company and look at it from the ground up and where the company could be in a year or 2 or 3 or 5 down the road, then you don't have any way to anchor yourself in anything but where the stock price is traded. So, depending on how you approach this, in my case, I really ignore where the stock has been over any given short period of time. I'm looking at where Tesla could be 5 years from now. Would I prefer to buy a Tesla stock more cheaply than it trades at today? Sure. But I don't necessarily believe that, its high price is some ceiling that we have to worry about. It might be in the short term, and it might be for those people that trade the stock and look at charts and that kind of thing. Fine, I respect all that. But I'm playing a very different game than they are in that I'm looking to own companies for a long period of time.
yeah.
And so what they do in the short term doesn't really concern me. In fact, I'll use it to my client's advantage to the extent possible.
Mm.
Um, Again, I think to answer your question more directly, it really depends on what kind of an investor you are.
Yeah. In your situation, right? Yeah,
If you're a
for
short-term
sure.
investor, then where the stock has been in the last few weeks matters.
Hmm. Hmm.
If you're a longer-term investor, I don't really see it as being that relevant at all.
Hmm.
And
Yeah.
we've also seen too, by the way, in some of the shows that you and I have done, we've talked about how Tesla stock can move suddenly and then might be flat for a period of time.
Yeah. That was very revealing. There was one show that we did, and you had great graphs, and you showed that in the history of Tesla since IPO, there was 41 days
Yep.
that if you had held the stock during those, obviously this is just theoretical, but if you had held the stock during those 41 days, that's where all the gains were experienced out of this history of the IPO, right? And that's where that just is explained to people that, and then you showed that every single day the stock basically goes up and down about 2%, and then you show what's the percent of time it goes up and down to 5%, 10%, like that, huge swings,
Yep.
and there are quite a bit of that, mostly in a plus or minus 2% regularly. And then there's huge downtrends. But then If you had held this, so the only way to have known which of those 41 days to have held it is just if you had held it since the IPO and never touched it and just let it go, you would have had it during those 41 days. If you tried to time it, you might have missed a couple of those or a few of them, right? So, yeah.
Yeah, and if you missed those, it would have hurt your results quite detrimentally.
Like significantly, like 10x or
Right.
something like that, like massive
Yeah.
changes. Yeah.
And it's interesting because for all those people that do trade the stock and for all those people that do covered call strategies and so on, that may work 95% of the time. And maybe they haven't yet suffered through one of those 5% events where all of a sudden that strategy didn't work out so well for them, or they're not willing to admit it to you. But just again, just understand that that's a common thing for all high growth companies.
Yep.
They can be what's called dead money for a period of time,
Yeah.
and then all of a sudden come to life and reach a whole new level at a pace that is just mind-blowingly quick.
Yeah, and even that, we've even all the research you've done, all the charts you've done, we actually don't know what is the trigger for the catalyst.
Right. Yeah, there have
So
been many triggers typically around earnings and earnings surprises and
yeah,
sort of the conference call and what was discussed on the call, on the earnings call.
hmm
Those tend to be the biggest events that I've seen with Tesla and other companies.
yeah, the product reveals don't do it. I mean,
No.
or Elon tweets don't do it, and maybe plus or minus 1 or 2 days, and then it doesn't really,
Yeah.
carry forward onward.
Yep.
Yeah. So just final question then with you. So your conviction on Tesla. Why would somebody go all in on Tesla?
Well, I wouldn't necessarily advocate that somebody should. I think that's a very personal decision
Personal
and one
decision.
that has to be sort of in tune with your comfort level and your conviction with the company. And in order to have a high level of comfort and conviction with anything, you have to study it very, very closely. And even that said, we have to be honest with ourselves and recognize that there are risks to Tesla that are totally out of our control. Even if you
Huge
understand
risks.
everything about Tesla, you've read
Yeah.
every single 10K and 10Q, and you understand every single piece of the company, there are risks to this company that you may or may not fully appreciate.
Yeah.
Key man risk is one huge one,
Big one. It's a
right?
massive one.
What happens if something happens to Elon,
Yeah.
right? Whether it's a health event or someone does something to him or whatever it is,
Mhm.
that is a risk to the company. Now, I believe, much like Apple, that the kind of the die is cast in many respects with respect to Tesla for the next few years.
Robotaxi will succeed, will
Yeah,
still roll out and be commercialized. Bots will succeed, will still be rolled out and commercialized. Maybe
yeah,
no new inventions. Maybe they won't completely take advantage of what potential AI could do. But those two, which are massive businesses, maybe they won't be 100% of growth. Maybe they'll be 50% of growth. But they're so big markets that
that's
Tesla will
right.
still grow from where its current
And
situation.
there's
But
an incredible team in place at Tesla. It's not just one guy doing everything, although certainly Elon
mhm.
is incredible in terms of what he contributes. But the company will move forward, just as
Mhm.
Apple did when Steve Jobs passed away.
By the way,
Um,
just FYI, you and I believe this, but a lot of people I talk to don't agree with that. Just FYI, many of them still believe that this is an Elon company. Something happens to Elon, stock is dead, and that these programs won't necessarily progress as fast as we think they are, or will still succeed.
well, that may be true. I think the programs may not proceed at the pace that they would otherwise if Elon was still around. And there's no doubt that the stock would be severely impacted. So I'm not suggesting that's not the case. I'm not suggesting the stock would just shrug it off and say, "Oh, company's fine." I'm not suggesting that at all,
Hmm.
right? But to your question about going all in, I think you have to be very thoughtful and very careful about that. Um, some people are in a financial position where they can go all in, and even if the stock drops 50%, they're fine, right? And other people may not be in that kind of situation.
Right. Yeah.
We're going all in and having an adverse effect that may impact them more so than they really want it to.
Hmm.
Now, you don't necessarily have to be so diversified and own, 5,000 companies, but some diversification may be very wise.
Hmm. Yeah. I mean, not all of us are, again, different stages of life, different financial scenarios they're in. Some people are looking for growth. and are willing to take more risk because they want growth. And some people just prefer to have guaranteed kind of lower risk, like an ETF, or that, you know, just you know, going with the market itself.
Mm-hmm.
So
you could, in some ways, and this really isn't entirely appropriate, but I think it's worth thinking about. You couldn't look at Tesla as a bit of an ETF of its own.
Yeah, that's another question, but
right, because of its diverse businesses and opportunities. You've got the auto business, you've got energy, you've got the you know, the Tesla Semi, you've got robotaxi, you've got the bot, other opportunities within AI. So it's a little bit of a mini ETF in that regard, although again, it's still run by one person and one board, one management team. So it's not the same kind of diversification. Even in an ETF that owns 10 stocks, in that situation, you've got 10 different companies. So it's not really appropriate to call Tesla its own ETF.
right.
But
No,
in some
yeah.
regards, you could view it that way in terms of its diverse businesses.
Wonderful. Thank you very much, Cern. Appreciate you. You've, again, why I'm talking to you is because you've done a lot of work, a lot of research. Check out his X account at Cern Basher. And then on this YouTube channel, there is quite a number. We've been doing weekly shows, and each one of them, you come with slides. This is one of our rare shows where we haven't really showed some of your research, but it's a good roundup of everything we talked about. Thank you very much, sir.
We'll have plenty of slides next week after the earnings call.
Yeah, it's going to be a big one, I think. We'll see what happens.
Yep.
Bye, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.